Good morning, everybody. It's Tuesday, June 13th, 5:29 a.m. Central Time. July corn futures up 1 3/4 at 6.19. December corn up 2 1/4 at 5.51 and a half. July soybeans up 12 3/4 at 13.85 and a half. November soybeans up 8 1/4 at 12.17 and a quarter. July Chicago wheat down 3.5 at 6.30 and a quarter. July Kansas City wheat down 9.5 at 7.87. July spring wheat down 8 at 8.06 and a quarter. Mackenzie, we had some crop ratings out yesterday. Why don't we start there?
U.S. corn conditions declined again last week. The crop was rated 61% good to excellent nationally versus 64% last week and 69% on average. Only 8% of the crop was rated poor to very poor. States with a good to excellent rating of 50% or below include Illinois, Missouri, Michigan, and Pennsylvania. The crop was 93% emerged through Sunday versus 87% on average.
So we certainly have some states here that look problematic. Illinois is only 48% good to excellent. Indiana is only 55% good to excellent. Michigan, very bad, 38% good to excellent. Ohio's 57% good to excellent. This is week 23. In week 23, we're rated 61% good to excellent. In week 23 in 2012, we were rated 66% good to excellent. So the ratings right now for this week of the calendar year are actually worse than they were in 2012. Now, every year, somebody tries to make a 2012 comparison because it gets dry somewhere. This is going to be 2012 all over again. Well, this year, it's 2023. We've got worse crop ratings. The drought monitor looks worse. We've got poor crop ratings as a result of dry weather, whereas the last time we had crop ratings this bad this early was 2019 when we had just a really wet start. It wasn't a dry type situation. So I think it's fair enough to at least make the 2012 analogy here and say, how do we compare? Because a lot of stuff, the drought monitor and the ratings are worse. Now, you may talk to a meteorologist or look at the weather forecast and say, well, it's not going to end up that way. But you know what? Weather forecasts are all smoke and mirrors. This stuff, the drought monitor, is real. The crop ratings, some people might say, are not necessarily like totally reflective of reality. A lot of this stuff is subjective in nature in terms of crop ratings. But it's not good. It's not good. And it's fair to make the 2012 analogy this year, where in just about every other year since, I would say it is not fair to make that analogy. What about soybeans?
So the soybean crop was rated 59% good to excellent nationally versus 62% last week and 70% on average. States with a good to excellent rating of 50% or below include Illinois, Missouri, and Michigan. The crop was 96% planted through Sunday versus 91% last week and 86% on average.
Yeah, your same areas with the same problems: Illinois, Indiana, Ohio, Michigan. Missouri's not good in terms of either crop. And then you've got better ratings by comparison. The further west you go, Iowa 66% good to excellent in beans. Minnesota 75, which is actually up on the week. So same areas with similar type problems. Let's jump to the weather. We do have some rain on the radar this morning.
Yeah, so rains are pushing across northern Illinois and parts of Wisconsin this morning, while a lighter system moves across parts of Indiana and Ohio. The forecast offers more scattered rain over the next 7 days, but is void of a widespread storm system. The Euro model is much wetter than the GFS. During the last few days of the 10-day period, dryness will continue to build in many areas of the Corn Belt here this week.
So you've got rains that are going to pop up like this storm system this morning. I don't know if this hit a ton of areas necessarily, but if you guys are in this far northern part of Illinois or southern Wisconsin, you caught some of these rains and you have totals, drop them in the YouTube comments here. But yeah, I mean, no like big, broad, sweeping system. It's going to be more like scattered stuff here over the next 7 days. This Euro model for the eastern and central Corn Belt in particular is quite a bit wetter than the GFS. Here's a map of weekend rainfall totals. I did not have one of these yesterday. They weren't up to date, but the weekend rains kind of like wrapped around this like southern edge of the Corn Belt and missed, the northern half of Illinois, most of Iowa, most of Minnesota, most of Wisconsin. The areas that did catch rain over the weekend would have been a lot of Ohio, southern half of Indiana, southern half of Illinois, fair amounts of Missouri and then the plains, but your big, broad, sweeping Corn Belt rain kind of lacking here for sure.
So if you guys are not subscribed to our premium content, you sure need to do so. Joe, tell me about this video you put together yesterday.
There was a lot of talk, has been a lot of talk, still is a lot of talk about this year versus 2013. Now, I mentioned 2012 earlier because of the dry conditions, building drought, that sort of thing. If you pull up the charts, December 2023 and December 2013 look fairly similar. I talked about the comparisons, but also some contrasts. We talked about the crop scare event that occurred in 2013. How does it compare to what we've got going on right now? And then, as always during this time of year, guys, June and July, we do a pre-open weather update video on Sunday night, and this comes out about an hour before the market opens on Sunday night. Run through the forecast, what's changed, what does it mean for the markets. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. This is just a standalone product, guys. Ton of information direct from us every single business day. Check it out this morning.
U.S. winter wheat harvest is progressing. The crop was 8% harvested through Sunday versus 4% last week and 9% on average. Progress was only noted in Texas, Oklahoma, Kansas, Arkansas, Missouri, North Carolina, and California. Conditions improved again. The crop was rated 38% good to excellent versus 36% last week.
Yeah, you've seen some decent improvement in winter wheat ratings. I mean, they were down in the 20s, I think, like a month ago, and now we're up to 38%. So I guess that's a result of some of these rains across the southern plains in particular. And I know a lot of that stuff was too little, too late. But yeah, the markets just had a tough time rallying despite those crop issues. I mean, it's the same story, different day, guys. U.S. wheat is just overpriced. What about spring wheat?
So U.S. spring wheat conditions are below average. The crop was rated 60% good to excellent nationally versus 64% last week and 65% on average. South Dakota, Montana, and Washington are rated 50% good to excellent or below. North Dakota, Minnesota, and Idaho are better by comparison.
Nothing here is above average. Corn ratings below average, soybean ratings below average, winter wheat ratings below average, spring wheat ratings below average. So I'm not going to say that winter wheat was a full-blown crop issue or disaster in terms of the HRW crop, but spring wheat, soybeans, corn, maybe some pending issues here certainly, and again, not a ton of relief in the forecast necessarily.
U.S. corn shipments declined on the week. USDA reported that 1.3 million metric tons, so 46 million bushels of corn were inspected for export during the week ending June 8th. The print was down 3.1% on the week and down 4.3% versus the same week last year. Accumulated corn shipments for the current marketing year are down 31% versus the same time period last year. Soybean shipments decreased a whopping 37% from the previous week, totaling 140,179 metric tons. Wheat shipments were reported at 246,559 metric tons, down 19% compared to the previous week.
So the pace of shipments, corn shipments, and soybean shipments also, they're not what we'd like to see. But now that USDA has made these downward revisions with its export forecasts, they did it again on Friday last week, we're probably on pace to hit those projections. So I think from here on out, if you see adjustments to the export forecasts on the old crop balance sheets, they're not going to be huge. Like I think the USDA is probably close to reality now, given what we know. So I think that they have made the correct adjustments, which was something that we've talked about for weeks and weeks and weeks. I think they're probably about where they need to be in terms of the export projections.
The Brazilian corn harvest is progressing. Well-followed private group Ag Rural estimated that the country's second and larger corn crop was 2.2% harvested through last Thursday versus 6.6% the same date last year. A large portion of the crop was planted late. USDA increased its estimate for Brazil's corn crop last week to 132 million metric tons, which would eclipse last year's record by nearly 14%. Brazil has quickly become the world's lowest cost corn exporter given its massive crop.
Huge crop in Brazil, and yeah, they're cheaper than we are, and that's why we don't export any material amount of old crop corn. Hopefully post-harvest we become competitive again and we can start shipping corn. A lot of people think that and myself included, we did a video on this last week, but USDA has a pretty lofty new crop export projection for corn. They're projecting that corn exports out of this country are going to increase, I believe it's 18% year over year during this new crop marketing year that begins on September 1st. That is a tough pill to swallow because Brazil's got this big crop. We're not seeing the book of new crop sales. A lot of people think that number is overstated, and you can throw me in that camp as well.
Oil prices dropped by 4% on Monday. Brent crude futures fell 3.9% to settle at $71.84 per barrel, their lowest price since December of 21. West Texas Intermediate crude dropped 4.4%, settling at $67.12 per barrel. The pullback comes only days before the U.S. Federal Reserve meeting. The Fed is expected to pause interest rates this month, but investors are concerned hikes will resume in July. Goldman Sachs cut its oil price forecasts early on Sunday to $86 per barrel for Brent and $81 for West Texas Intermediate on the expectation of crude supplies expanding.
So WTI is at 68 bucks. Goldman's talking 81. We've been down here in this neighborhood before. This is the August contract, but we've been down into the mid 60s and then bounced on a couple of occasions this year. I don't know if this will be the same or not. In the past, like past months, I had thought that this weakness in crude is kind of negative. The grain markets. It seems like we've seen a separation here. Corn and soybeans are kind of doing their own thing. They're trading weather. Crude's doing its own thing. It's trading supply and demand essentially and OPEC stuff when it pops up. So maybe we've seen the separation here again. And I think I've said this before, for the vast majority of the public, cheap crude is good. Cheap crude is cheap gasoline. But for our audience here, we like high commodity prices, higher crude, a lot of times associated with higher corn, soybeans, cattle, whatever, you name it. So it's different depending on who's watching and paying attention, I suppose.
Inflation is forecast to ease in May. May's consumer price index is expected to increase 0.2% from last month, a slowdown from April's 0.4% increase. On an annual basis, May's CPI is forecast at 4.1% year over year, down from April's 4.9% increase. If a 4.1% annual increase is realized, it would be the slowest annual increase since April of 21, but still way above the Fed's 2% target. On Monday, markets were pricing in a 75% chance that the Fed would maintain its current interest rate in June. May CPI data will be released here this morning at 7:30 Central Time.
Yeah, this could potentially be a big market mover in the outside markets, probably not for our grain markets. If you look at a CPI chart, this is your annualized change on a monthly basis. We have declined for 10 consecutive months. This thing peaked in June of last year at 9.1%. That was your peak headline CPI. We've declined every month since. We're looking for an 11th consecutive monthly decline. So inflation is not over. We're not to the Fed's 2% target yet, and I don't know if we will be anytime soon, but it's come down quite a bit, and that's why people think the Fed will pause on Wednesday. This doesn't mean that things are going back in terms of pricing to where they were in 2019. It just means that the increases are occurring at a reduced rate, which I suppose is a positive. Cattle market yesterday.
Yeah, cattle futures found some solid ground on Monday. Live cattle futures closed an average of 124 higher. Feeder cattle futures closed an average of 50 cents higher. Box beef continues to head for the moon. Choice box beef was $4.50 higher on Monday afternoon at $337.43. Select was $4.53 higher at $210.24.
What a run. Outside markets, U.S. dollar is off just a little bit. Stocks are mixed. Bonds up a little bit. Precious metals slightly higher. Crude oil attempting a recovery here, up $1.31 in the August WTI at 68.60. Have a great day, guys. We will talk to you on Wednesday.